Hello, I'm Nigel Woods from Woods Properties and Lettings, and this short video explains what makes residential property investment so attractive in England. Prices of houses have doubled on average every 10 years for the last 60 years, and this trend is likely to continue for the foreseeable future due to a lack of supply. There are more of us renting now, and this trend is due to continue. By investing in property wisely, the returns can be high and ultimately infinite. Let me explain. The property cycle is the invisible market gauge that charts the cycle between booms and troughs. Looking back over past property cycles, and in particular the boom times, well-located properties in certain regions doubled on average every 7 to 10 years. Some years experienced double-digit growth, and there were other periods where the market was stagnant or falling. But the property cycle goes through an initial upturn, followed by a ripple from the major conurbations, followed by a boom across the country, and then a bust. This cycle seems to occur once in every 18 to 20 year period. In 2003, 71% of households in England were owner-occupied. In 2015, it became 65% and is predicted to drop further. The report, based on research by a former Bank of England economist and published by the Intermediary Mortgage Lenders Association, said the trend will continue across the UK. By 2032, less than half, 42% of households in the UK will be homeowners. It will be the first time since the early 1970s that the majority of people are renting rather than owning. According to Sequence and reported in the Telegraph, rental demand soars as 7 potential tenants chase every property. Demand for rental properties across the UK grows by 18% on an annual basis amid shrinking supply, report finds. 2015 reports show half the number of homes are being built than are required just to keep up with the expanding population. The estate agent, Savills, predicts that between 2014 and 2019, across England and Wales, the number of households privately renting will increase by 1.2 million. Owner-occupiers will fall by 200,000, and social renters will fall by 50,000. Currently, the average age of a first-time buyer is 38. They're predominantly renting 1, 2 and 3 bedroom flats and houses. They choose to rent because of flexibility or lifestyle choice, or they're forced to rent because they can't get a mortgage or they don't have a sufficient deposit. So why invest in property? There's a steady and growing demand for rental property. Now let's see how it can work for property investors. Let's do the maths. Property prices rise and fall, but the indicative curve shows an increase of around 10% every 10 years or so. Let's look at an example. Buy for £100,000, mortgage for £75,000. Based on historical house price inflation, the property would be worth £200,000 in 10 years' time. On an interest-only mortgage, you would only need to give back £75,000. This would return your original £25,000 and give you £100,000 gross profit. Of course, tax would be payable at the prevailing rate, and the way the property is held would depend on the amount of tax payable. Timing of the purchase and sale is also important here. With regards to income, gross yields of between 5 and 10% can generally be achieved, although it is possible to achieve gross yields in excess of 20% using some purchase strategies. This excludes the capital appreciation of the property. So in times of low interest, offers a high rate of return. This is a live example of one of my properties. I bought a 3-bedroom property in Yorkshire for £87,000. It was a probate sale and was in need of renovation. I spent £17,500 renovating it and then had it revalued. It was valued at £130,000. The mortgage, based on that revaluation at 75% of its value, was £97,500. This left me with only £7,000 of my own money in the property. I was then able to let it out at £550 per month. If I had an interest-only mortgage charging 5% per year, then my annual profit would be over £1,700, which equates to 24% return on the money I have left invested in the property. I'm sure you'll agree, it's a good return, better than a bank. Like any investment, the right properties need to be bought in the right areas, and they need to be actively managed for the investment to maintain an increase in value, as well as to provide an income. The secret is leveraging other people's money to acquire and skills to manage so that you can invest passively and profitably. We can help and advise on a suitable property, guide you through a myriad of legislation to keep you on the right side of the law, and look after your investment throughout its life. Why not let us help you to invest and profit? Thanks for listening and watching. Do get in touch if you have any questions. We're always happy to help.